Moody's just downgraded the US, but what do the candles say? Nasdaq printed an impulse down. Dow Jones flipped a daily chart in the final minutes. Russell, some call it a bargain lot. Huh. And S&P 500, it's time to zoom out. All fractals are in play. Tesla and Google both just lit up the board. This is your weekly digest from investing angles, where we forecast before the ground even blinks. And today we start with Nasdaq. So this is the candle map as of the weekly closure on Friday. So what is unusual here? I'd like to highlight here. So this is the practical level of the closure, and this is the official one for the futures. And I'd like to say that this is the daily candle, and technically it is slightly bearish because it's an inside candle with a potential pull over. But this is not the biggest thing. So what is happening if we flip, for example, for an hourly chart, and we look at the after hours trade? So what we are seeing here, it's a big drop of over 100 points for Nasdaq, and technically this clearly changes everything. So this is a very strong bearish dark cloud cover on the 12-hour frame, and if we consider the same, so this candle would be much more stronger. So this would be instead of inside candle, it would be an advanced block at this level. We'll see we have a green one, but this is going to be an advanced block, and this is a big change, big downside. So if we look at the weekly frame, the candle technically is bullish, no concerns here, and everything looks good. But let's continue to explore Nasdaq. So this is what is this is the MACD chart, something that we've been tracking since the beginning of March, when Nasdaq formed a very strong MACD bearish cross on the 15-day frame, and we said that it's going to drop towards 13,000, and this was our very ballpark estimate based on some statistical analysis. So that was our expectation. So Nasdaq moved towards 16.7K, and then it moved higher up. Now what we are looking for is the continuation for this, because this MACD cross didn't flip, and instead Nasdaq basically doubled down. So this is the monthly cross which Nasdaq made back in March and expanded in April. So far it's been only half a month for May, and yeah, there is a chance of flipping it up, but from the history perspective, it happens very rarely, and today is May 17th. So now let's move on to the next chart, and let's start exploring them. So this is Elliott Wave formations. This is what we expected Nasdaq to do at the beginning of April, when we thought that it formed potentially an impulse down, or at least a big wave A of a larger correction. So this is the perspective. That's potentially wave A complete, or wave A of a bigger correction, which would be an A, B, C for wave B here. So this wave moved slightly higher, and now we have better chances for this one to be wave B. And I'd like to remind that this particular wave of the bottom has been corrective, and right now the wave that Nasdaq is forming is not entirely impulsive either. So this is the perspective from the midterm frame. So now let's move on to the next one. This is our chart that we've been tracking since April 22nd, when we said that Nasdaq is going to target 21.4K, and this is exactly what happened. So right now it is hanging at the upper level here, upper boundary, and since our call it made 17%. So now, as per the previous chart, we have two counts. The red one, wave B, potentially closing here and moving towards wave C, or wave A, B, C of wave B. Another count that we've been looking at recently is the green one, potential impulsive 1, 2, 3, 4, 5. There are quite a few reservations against this count, particularly the structure of very first wave 1, which has clearly been corrective. So, and the wave 3 here is not exactly an impulse in the classical form. Well, so let's see what happens next. And this is the chart that we shared with our subscribers just on May 15th, when we said that Nasdaq was the first one to form an impulse of the top. And this was either wave 1 or A, and we said that Nasdaq is going to form a consolidative wave, corrective wave, either B or 2. This was our chart on May 15th, and we were expecting Nasdaq, after forming this wave somewhere here, to drop down in wave 3, and this drop would be about 3%. That was our expectation on Thursday. So, and what happened on Friday, we can see that Nasdaq formed a corrective wave up, which is wave A, then it was wave B, and most likely it's been a diagonal for wave C. And after hours, we had a burst and a sharp drop of about 0.6%. And the most importantly, that this wave has been impulsive. So now I made some estimates, and based on the size of this impulse down, we can project the size of the entire wave down. So assuming this would be wave 3 here, so this would be 1, 2, 3, 4, 5, and my approximate target right now is about 2.8% of the most recent top on Thursday. Well, that's the perspective. And if Nasdaq makes this wave on Monday, Tuesday, then we would be looking for wave 4 and wave 5 there. So we would be considering this as an impulse of a larger degree. So that is the perspective for wave 4 somewhere here, once we have a closure for wave 5, and wave 5 would be here. Well, that's the perspective, slightly bigger. Now let's have a look at the long-term chart. This is the chart that we've been tracking since November. We said that in November, Nasdaq is getting closer to the top, and in December we issued this chart. So now it is forming an impulse as forming a wave, as we discussed. So potentially this is wave A, wave B, and wave C. These are our targets, and I'd like to say that based on some statistical estimates, we have a target of 13K for Nasdaq. If it happens, that would be an interesting, very interesting forecast. And now the final for Nasdaq, I just wanted to show you these fractals. So these are Bitcoin on the 10-day frame and Nasdaq on the 2-month frame. These are almost identical. And I made this chart back in July 27, 2024, so like 10 years ago, 10 months ago. And I said, well, that's a very interesting thing that is happening right now. So if Bitcoin was able to drop 84%, and then it, after forming an impulse, it dropped about 77%. So for Nasdaq in year 2000, it declined about 33%, which is somewhat aligned with the Bitcoin. And now maybe we should expect about 77% off. Well, it's a stretch maybe, but nevertheless, this is what statistics say, and these are the fractals. And for the candles and Elliott Waves, it doesn't matter what to measure, whether it's Bitcoin on the 10-day frame or it's Nasdaq on the 2-month frame. So the waves are the same ratios, and the declines and retraces are also measured by Fibonacci levels. Well, that's the perspective for Nasdaq. Obviously, it's a very strong and bearish and dark one, but nevertheless, we'll keep it on a back burner until things are getting better and clearer. All right, so if you found a value in how we track and the turns before the crowd catches on, this is the time to subscribe. We are building a community of traders who rely on deep technical signals and not headlines. And a quick checkpoint: if this breakdown has helped clarify the direction of risk, let me know by tapping the like button. It's a small signal, but it helps more than you think. Now back to the charting, and we'll talk about Russell. Some think that Russell is a quiet spot and we can park there while the other indices can suffer some decline. Well, let's see what Russell candles are telling us, and let's try to evaluate the perspectives. So on the daily frame, Russell is clearly bearish because it had a chance on Friday to close with a strong green candle, but it was pushed back below the high of this red candle, and now we are looking for a bearish continuation. The same on a 3-day frame, and 3-day frame also exposed like a 10 candles sequence, 10 green candle sequence, which is already a big technical stretch. So now we are looking for a reversal. And on the weekly frame, so far everything looks bullish so far. Let's see what happens on Monday. And from the perspective of larger frames, this is something that I wanted to talk to you. So this is the monthly closure, monthly April closure. The candle was technically bearish. Now we are seeing a move higher. However, there are still 15 days until the closure. And for the 2-month frame, I'd like to say this was a very strong bearish formation, generally highlighting the perspectives for the move down. And the 4-month frame, which also formed in April, it was a very clean tower top. So after this candle formation, there is a very high chance that Russell moves lower on this frame. Obviously, we'll see ups and downs in between. However, the frame remains bearish. Now let's move on to the next chart, and this is MACD crosses. On the monthly frame, Russell is leading the pack. It's ahead of all other indices, and it formed its MACD bearish cross on the monthly frame the earliest, and now it's in month number 3 after the cross. You can see it's already, we projected this chart in March 15, saying that Russell has a chance to land somewhere between 14 and 1800. Well, it's been there already, about 1700, but something tells that this is not over. We might see a continuation down. So far, let's see how Russell develops. And now let's move on to our Elliott Wave charts. So this is what our chart, we've been tracking it since February, so it practically remained the same. So we said that wave 3 will be here around 1900. Well, it moved a little lower to 17, and after it hit the bottom, we said that this is going to be an ABC formation for wave B. The only thing that I think that we needed to make it a bit more condensed so that markets are moving faster these days. Well, that's what it is, the same chart. What we are seeing here is a corrective wave up. So this wave, either 1, 2, well, I marked it with a green count, 1, 2, 3, potential 3, but this wave is not an impulsive wave, and most likely it's either wave A for the red count, this one, or it still could be wave 4 of a larger impulse. I think this is the worst case scenario. This would be the dark sign for Russell, because right now we still can count wave 1, 2, potentially 3 as a clean, very clean impulse. Wave 4 hitting the level of the wave 4 of the previous lower degree, and now potentially wave 5. In this case, it would be just the first wave down, with the first impulse down, and after a consolidation for multiple months, probably another wave A, B, C, we would be looking for a closure of this big and strong correction. So that's the perspective. And for the long-term chart, this is our famous chart that we are tracking since January 2020, and it has a history of it. So this is when we called a top for the famous decline in February, March 2020, when we said that Russell is probably going to hit this level, which is somewhere between 1000 and 900. And if you remember the history, so this was the call on January 2nd, this one. And after that, Russell moved towards 966, dropping right here. After that, we made a few moves, and on November, we had another call, the big one. And again, in January, it looks like the January is a very critical month for our forecasting. In January, we called it again. So we said that this is a top, and Russell has very good chances to move down. And this is what happened on February. On February, it formed a bearish engulfing on the 2 months frame, and now we are looking what is happening. So this is the perspective for Russell. It's either right now, it's either wave A, B, C, wave 2 in blue, or we are still looking for wave C of wave 4 somewhere here. So this is the perspective target, and it stays as is. So this is the all-time channel for Russell, and once we have another wave down, the question is how deep it will be and how long would it take, because the wave C could be either a diagonal or a sharp impulsive wave, and after that we would be looking for another rally. Well, that's the perspective for Russell. And if you're new here and want more than just the video breakdowns, check our investing angles. We've put together a special introductory analytics package for the first-time users, candles, waves, momentum, the full story, all in one place. And speaking of precision, if you haven't checked our master trader David's swing trade room, now might be the time. While most were guessing, his recent setups have navigated the turmoil with stunning accuracy. Now, let's talk about Dow Jones. A quick and powerful transformation. So if we look at the Dow Jones daily candle that closed on Friday, this is the futures chart, everything looks good. And this candle is technically closing above the red candle high, forming a bullish continuation candle, opening a path towards new higher highs. However, if we look at the closure of the futures, let's say this is the 12-hour frame, and it was a big drop of over 200 points just after hours. And this is the transformed candle, and this is the level of closure, 42,535. And first of all, this 12-hour frame is now an advanced block. But if we look at the potential closure here, 42,533 is just 2 points below, 2 basis points below that high of this red candle, which makes this green candle bearish. So just a quick flip from bullish to bearish. And well, now we have a totally different story for the Monday opening. If we look at the weekly frame, everything looks bullish here, and well, let's hope it will recover. But the question about the candles. Right now, if we look at 14,533, so technically this is a new closure, and we have to treat it as is. Now let's move on to the other frames. So this is MACD cross. This is something that we've been tracking also for a while. We know that all MACD crosses on the monthly frames are bearish right now. And this was a statistical estimate. We were looking for 34.7K for Dow Jones based on just the crosses. So this call remains active. Let's see what happens next. So this is our chart that we shared with our subscribers way back in January 2025, and the chart remains the same. I'm not changing anything here. So far, wave A has been complete. Now we are looking for potential wave B, and the next one would be wave C. If wave B closes here and reverses, I would say that we would be looking for this particular level for wave C to complete, somewhere right here between, let me put some targets, approximate targets. So this one and this one. So this would be the most typical targets for this wave. Let's see how it plays. So that's the perspective. And now let's move on to, this is the long-term perspective. Now let's move on to the midterm one. This is the chart that happened, that we track since at least April, beginning of April. Oh, yeah, it was been bigger history. So we started with March, and we were looking for this low, and after this we charted that one. So we have a clear corrective wave ABC here, and potentially wave that is now being either completed or very close to completion. So this, I think that from the timing perspective, this wave could easily qualify for the entire wave B. So instead of the bigger red one, I think that this could be an A, this would be B, and the next one would be wave C somewhere here. So that's, let's see if we get a confirmation next week for a reversal, and if it happens, then we would be looking for these particular targets. And I think that the final chart here is Dow Jones Transportation Index that we also track together with Dow Jones, but separately on the separate chart. This is our call on November 14th, when we said that Dow Jones Transportation completed its wave B, potentially in very classical shape, and now we are looking for wave C. So far it's been falling down, and it formed so far an impulse, wave 1, 2, 3. This wave considered an wave 4 because of its corrective structure, and now we would be looking for wave 5 to land somewhere between 11.8 and 10.5K. Well, that's the perspective for Dow Jones Transportation. And now let's move on to our main discussion today about S&P 500. And for those who want more than just a video, our ultimate subscription includes full written access to market setups, wave charts, and high-level strategy across all major instruments. If you're serious about timing and signals, this is where to go. Well, and by the way, I had a few notes from our members. So if you're subscribed but not getting alerts, it's because you haven't hit the bell. YouTube won't remind you unless you ask. Click the bell so you never miss a critical market turn, a critical market update by Investing Angles. Now let's talk about S&P 500. So the similar story. The index closed with all bullish candles. Nothing to be concerned about it. But once we start looking at the futures, we are seeing a similar transformations that we just discussed for Nasdaq and Dow Jones. So, and I'd like to remind that while short and midterm S&P 500 odds were bullish, the long-term one remained bearish, and this is the 2 months frame, 2 months closure with a very strong bearish engulfing, which is also a hammer. And on the monthly frame, we also had, technically this is a bearish candle, bearish continuation, and the 4 months frame also a bearish engulfing. So what we are seeing right now is an attempt to cancel it, but there are still 3 months to go, and it's highly unlikely that bulls would be able to keep the pressure for the remaining period. So let's move on. This is a consolidated chart for S&P 500, Nasdaq, Dow Jones, and Russell from the perspective of MACD. So as you can see, MACD crosses are here, and they didn't go anywhere, and most of them are of a record magnitude, like for example S&P 500 and Nasdaq. Well, that's something to consider, and we'll keep this in mind. Now let's move on to the fractals. This is the fractal I discussed earlier a week ago. Potentially, if you look at the squared fragments here, so they are identical from candles perspective and from technical perspective either. So if we see the next 15-day candle here forms a red candle, I would say this could be a reversal, and this is the exact match that happened right now with the period in November 2021 and March 2022. So that's something we also keep in mind. Now let's move on to the charts. So this is the chart, our long-term chart that's been on the table since the beginning of January. This is where we identified the top and said that S&P 500 has a very good chance to move towards 5,500 to 5,000. And this is exactly what happened. This has happened, and it overshot a little bit for the wave 4 in green. However, it still kept the price above this critical level, 4818.62, which if this level is crossed, then we will be clearly looking for a purple count here. So this would be wave A, potentially B, C, and this would be a bigger correction. So now let's move on to the short-term chart. This is again something that we've been tracking since April 22nd, and by the way, I think that it made about 12% since the call, S&P 500. Now we are looking for potential reversal here. So this wave has stretched quite a bit, and while we still have the green count on the table, 1, 2, 3, 4, 5, the chances for it to complete are somewhat muted right now, and the main reasons are Elliott Wave perspective. So this wave 1 is a corrective wave, which would be highly unlikely for an impulse, and this wave 3 is not exactly an impulse either because of numerous overlaps. So the most typical, the most probable path right now I would be looking for is the red one. Either this is wave B completed here, moving towards wave C, or a bigger corrective action A, B, C in purple for wave B, and then completed with wave A, with wave C. So now let's have a look at the closure to on Friday. So this is the wave that S&P 500 completed, and I would like to say that this wave is very likely an impulse, and I would say it's an extended impulse because it's slightly longer than the typical impulse would be. And by the way, this is a 10-second chart. 10-second chart. I just made this special for exploring the very minute details. So we can see a clear, very clean impulse of the top. Then we have a correction, A, B, C potentially for wave 2. Then we have a very big leading diagonal for wave 1 of 3, wave 1, 2, 3, 4, and 5, and now another one, wave 5. So technically this could be a very strong impulse, and the important thing that this wave up has been corrective already. So because of this overlap, so we have only 1, 2, 3 up, which is technically an ABC, and now we will be looking for either wave wave A, B, C like this. So either like this, or this is potentially everything we might get for wave ABC, and this is the beginning of the next impulse down. So we might see a very strong move at the opening. Well, that's an interesting to watch, and we know that the direction right now is down based on our candles estimates, some technicals, and Elliott waves. And now the most interesting chart of the day. This is the transformation of the daily closures for large caps: Microsoft, Amazon, Apple, Tesla, Meta, NVDA, Alphabet, and Berkshire. So, and I will talk about Tesla and Alphabet a little later as a special features of the day, but right now I'd like to show you something. So this is technically an official closure at 454 for Microsoft. But if we look at the 12-hour chart, boom, we have a very strong decline of about 1% after hours. So technically this is the level, I marked it here, this is the level of closure. And if we consider this, so this candle from moderate bullish, it transformed into strong bearish engulfing. And somewhat similar for Amazon. So this candle is not exactly super bearish, but if we look at the 12-hour frame, we have a falling three methods and a huge drop after hours, 1.7%. So technically this candle transforms into a big bearish engulfing. A very strong one here for Apple as well. So this is in complete dark cloud cover, which could be either bullish or bearish. But if we see a transformation, well, it's a 1.5 drop after hours, and technically it is a confirmation of a double top for Apple, and this frame is very significant. Another one for NVDA. NVDA dropped after hours 2.4%, and this candle technically it is a bearish one, but it required a confirmation. But if we look at the 12-hour frame, we might have a confirmed double top already. And the similar situation for Alphabet. And yeah, I'll talk about Alphabet in just a few minutes in our special feature. Everyone might be interested in Tesla, and Tesla also has a very strong drop after hours. So technically this is a bullish candle, transforms into a strong bearish one, bearish engulfing plus most likely a double top confirmation and 2.9% drop. And I think the most critical transformation was for the Buffett's company. So technically this is a confirmation of a bullish reversal. This is a piercing line, and this candle is a confirmation. But if we flip on the 12-hour chart, this is a totally different story. So this is the level of closure. This is a very strong dark cloud cover, and this new level is nothing but bearish. Well, that's the perspective. And these old 8 stocks, I think they make more than 50% of Nasdaq. If what candles are telling us is true, then we would be looking for a very, very, very concerning Monday. Well, now that's the perspective for S&P 500, as we know what happens. And now we can see that from candles perspective, from technicals perspective, all indices are aligned, and most likely the recent rally has come to an end. Now let's talk about special features of the day, and we'll start with Tesla. Right, so this is the candles, and I already discussed the candle transformation on the daily frame. So instead of a strong bullish candle, we have a strong bearish one. The weekly frame still bullish, no concerns at this moment, and the monthly frame after the April closure still remain somewhat neutral bullish. However, if we look at the bigger frames, for example, like 3 months quarterly frame, this is our previous estimate when we had this closure with an inside down candle, and this estimate was technical. We were looking for Tesla to hit about 140 just based on the candles. Now let's have a look at the chart. So this is the chart that we first shared in January, saying that Tesla made a top, a big one, and it was over $100, I think, at that moment. And after that, this is what happened. We said that it's forming an impulsive wave, was wave 1, 2, 3, 4, and 5. So technically right now, Tesla completed 1, 2, 3, and 4. Wave 4 is still valid here, so it needs a much higher move in order to invalidate this. Now, if this transformation, what we are seeing right now with Tesla and other stocks, makes a bigger bearish momentum, then we would be looking for a wave down, an impulsive wave down. And by the way, Tesla, we'll have a look at it just after this one. So Tesla made an impulse here. So it's an impulsive, it's a leading diagonal here, wave B corrective, B or 2, and now Tesla is moving in a very impulsive fashion. This is a very strong impulse, and I think that this is just the very first one of a bigger sequence. This happened after hours and just in less than 1 hour, a very clean and strong wave. So this was now let's talk about this wave. This is what we called on January 21st when Tesla was 420, and since then we were able to chart it clearly. So wave 1, 2, and potentially wave 3. So wave 4 is still possible here. It's a bit from the time perspective, maybe it's a bit off, but still within the reasonable expectation. So potentially this could be wave 4 and 5. However, at this moment, this could be also wave A, B, and C of the first wave A, and we were looking for wave B here. So it could be here, or it might have a more complex wave. So because this wave is somewhat short for the entire wave B. Well, let's see how it develops. So far we have a very clean impulse, and I would be looking for a continuation for it. So these are the targets, and they remain unchanged. We have between 210 and 140. This is something that we outlined way back in February, and the first target has been hit. Nobody believed it in February. Well, and now I think that we are going to repeat this experience. Now let's talk about the next feature of the day, and this is Google. What we are seeing here is the same very strong bearish transformation. So this candle wasn't super bearish. It could be even a bullish continuation one. But if we look at the 12-hour frame with after hours, we have a strong bearish engulfing and a drop of 1.65% approximately. So now we are looking for bearish engulfing of this candle with a potential move lower. So the rejection at the 200 days moving average. Speaking about this frame, this is the weekly frame. I think that technically we need to lower this green candle somewhere here, so it's no longer bullish. And what I'm looking here is a potential bearish flag here with these targets. So these are minimal targets for this flag. I would say it could be much bigger. And for much bigger one, I'd like to go to another. I'll show you on another chart. This is another Elliott Wave perspective that I was looking for Google. This is our chart in February when we said that Google completed an ending diagonal here, and it is dropping down. So it lost about 33% of the top. Now it is recovering in a bearish fashion, which is likely wave A, B, C of wave B, and it formed a very nice, fairly clean bearish flag. So speaking about the bearish flag target, this is the best chart to look at. First of all, I'd like to say that this chart has been in effect since February 6th. So what now we updated the targets slightly after this move, that overlap, and I would be looking for this one. And now I'd like you to pay attention to this particular wave. So this wave and this wave. So technically they are very similar, just of a different degree. And this, take a note of this bearish flag, this one I'm talking about, this bearish flag and this bearish flag. So they are practically identical, and they appeared in the same area with the same technical conditions. So if now we see a move down, it would be very similar to this one, and I would be looking for an end somewhere around this area. So I made some estimates here. So this would be the most typical target for Google to move around 131. However, it could be lower. Let's see how it develops. That's the perspective for Google for another large cap. Now let me wrap it up. So markets sent a message this week, and it wasn't subtle. Nasdaq impulse down, It has targets. Dow pulled the candle trick right at the buzzer, and Russell stayed flat, but don't underestimate the coil. S&P 500 structure now stretches across time frames. It's time to play all fractals. Commodities Digest was posted yesterday. Gold, more pain likely, oil signaling trouble, natural gas still under pressure, and uranium clear signal across Quad U, URA, and CCJ. Just check it and you'll see the difference. Strategy Digest was posted earlier today, and we warned about potential volatility fireworks, TOT's rare 100% after hours drop, dollar and yen reversals, and we hope you watched and listened. If you want all wave setups, momentum charts, and micro pivots, check out our ultimate package at investingangles.com, now with a first-time discount for new user. For daily and intraday action, master trader David nails swing setups in our Discord room. Kyle delivers sharp daily trades with discipline. Not getting alerts? Then you would need to tap the bell. YouTube doesn't remind unless you ask. Drop your tickets in the comments. Like, share on X, Reddit, Discord. Everywhere smart trader hangs. And support us with a super thanks. It fuels independent forecasting. At Investing Angles, we don't follow markets. We forecast them before the crowd even blinks.